Good afternoon, and thank you for attending OQEP's first quarter financial results for 2025. My name is Ridho Wahyudi from Investor Relations team. I'm joined today by our Chief Financial Officer, Mr. Jaber Al-Numani, and our Chief Commercial Officer, Dr. Anwar Al-Khawrusi. In the next 60 minutes, we will take you through a brief summary of our first quarter results, and we will then open up to question and answer session. Please use the raise hand option if you have question, or you can write your question through chat functions. We will select the question. Please don't forget to mention your name and institution when you ask question. Please restrict your question to 2 only. Please ensure that you are muted during the presentation and be advised that this call is being recorded. A transcript of the call and the presentation will be made available on the IR section of our website next week. Before we start, in this presentation, we make forward-looking statements that refer to our estimates, plans, and expectations. Actual results and outcomes could differ materially due to a range of factors noted on the slide and in our MSX filings. Please refer to our annual report and MSX filings for more details, which are available on our website. I will now hand over to Dr. Anwar.
Thank you very much, and good afternoon, everybody. I shall take you through OQEP's strategy and operational updates. I perhaps remind you all about OQEP, the third largest company producing oil and gas in Oman, the largest company listed in the Oman Stock Exchange, and it's the national flagship oil and gas exploration and production company. OQEP has got a very solid, robust, proven performance. I remind you also that we have grown 13 times in terms of production of oil and gas since the creation of OQEP in 2009. We delivered and we are delivering a strong financial outcome. Today, our rate on capital employed is 22%, and with that, we are exceeding our peers in the region. We have long-term contracts when it comes to gas, fairly stable, predictable, and that gives financial resilience to OQEP. And we have a balanced portfolio of oil and gas. In terms of our cost advantage, we have a significant cost favorable portfolio with competitive fiscal regime. Our operating expenditure continues to be below $10 per barrel oil equivalent, and we have actually demonstrated both operational and technical excellence in our operations. Perhaps I mentioned this, let's say, after seeing the latest concerns on the global economy. I must admit that OQEP presents a well-positioned EP company to handle low cycles of low economy cycles such as what we are going through now. We have demonstrated that ability throughout the past 15 years. In terms of financial robustness, we are delivering our promised cash flow from operations, and my colleague, Mr. Jaber, will shed more light on that. And we compare well with our peers in terms of our low leverage position today. We are agile, we are flexible, we can handle low economy cycles. As I said, we've demonstrated that in the past 15 years. We have a strong cash balance today of over $300 million. We can always optimize our Capex and OpEx. and we have demonstrated that ability in the past, management of our expenditure in low downtime times. We continue to deliver value to our shareholders, and we continue to grow as we have demonstrated in the past. And we are committed to basically continue with our financial discipline and financial planning in the future. In terms of value, we continue to deliver value to our shareholders through our robust cash flow generation ability, and we shall maintain the dividend payment of $600 million per year. I must remind you, and my colleague Jaber will highlight that for quarter one 2025 dividend that will be paid later this month, inshallah. I think if we go back here to the slide. So in terms of highlights on our operations, I must say when it comes to growth, in the 1st of May, I must remind you that we have celebrated the groundbreaking of the Marsa LNG investment, which we FID'd about a year ago. And that investment is delivering basically LNG sales in Sohar for OQEP and for our partner Total Energies with a favorable electrically driven train, LNG train, which marks one of the lowest LNG investments worldwide at 3 kilograms of CO2 per barrel oil equivalent. The investment totals about $1.6 billion, and OQEP invests 20% in that. Also, I want to highlight that we have signed a new investment in Oman, Block 54, with a new partner in the country, General Energy, which is a listed company in London, and we shall commence exploration activities in the block as we go through. We are planning to invest about $25 million in the next 3 years in exploration activities. And this marks quite a favorable, viable petroleum-led oil and gas block in Oman. I must also say that in Block 61, which is the gas, one of the important gas assets in Oman, we are finalizing a new update of the field development plan to basically increase our production of gas in that block by about 2 trillion cubic feet. In Block 47, we are drilling with our partner, Italian partner, Eni, an exploration well, which is going to be completed, inshallah, in the next 4 to 6 weeks. And this well marks an interesting exploration activity in central North Oman, and it will open new basically basins, exploration basins in the country. We have good hopes, inshallah, to discover oil in that block. In Block 53, we are engaged with the partners and the operator and the government to improve the fiscal regime in the block. And we shall, inshallah, complete and close on that pretty soon, inshallah. In terms of operations, we continue to deliver our activities in a safe manner, and we continue to reduce our recorded injury frequency in the operations that we are conducting in Block 60 and Block 8. We are today delivering 221,000 barrels oil equivalent per day net to our working interest, and this is quite stable since last year. In Block 60, we have been constructing the expansion of the Basat C facility. We are now just under 90%. We hope to complete the construction soon in Q3 this year. That will add additional oil capacity of 37,000 barrels per day and also 400,000 barrels per day water. This will help basically continue improving and increasing production and cash flow from our flagship asset, Block 60. In Block 8, which is North Musandam, North Oman in Musandam area, we have drilled a gas well in the gas field. That well is currently being completed, and activities continue in applying of hydraulic fracturing and so on. And we shall soon test the well with favorable gas production, inshallah. When it comes to in-country value, we continue our promise of heavy investment by Omani contractors. In Q1 2025, we've achieved about $54 million of investments in Oman, and that is 41% of our procurement spend in the quarter. With that, I shall leave the financial part to my colleague, Mr. Jaber.
Yeah, thank you very much, Dr. Anwar, and good afternoon to you all. So just to shed more light into our financial results in Q1 of this year. So starting with from our, as mentioned by Dr. Anwar, our operational performance. So where it comes to oil and condensate sales, so the volumes has increased by around 5%. The average price realized in this quarter versus the basically the quarter last year, there has been a decrease of around 5% in oil prices. The gas volumes that we sold in this quarter as compared to Q1 2024, it was lower by 5%, and the main reason for that is due to the turnaround that took place in January this year in our major gas block, Block 61, for around 2 weeks period. And then, I mean, after the turnaround, then there was a ramp up during the month of January, and then the plant stabilized around March. And accordingly, the realized gas price get affected because of that. In terms of the financial results, so we recorded a revenue of around 205 million Omani Riyal, as compared to 209 in Q1 2024. Our gross profit dropped by almost for the same reason of the decrease in oil prices. Our adjusted EBITDA, including the gain basically that we made from our JV company, which is Marsa, taking our share of profit in that, around 152 million. And the EBITDA, excluding that, is around 100, again, and 100, the same amount, 152 million. Our net profit for the quarter, we recorded a profit of around 75 million Omani Riyal, with a cash flow from operation, excluding the working capital, around 141 million Omani Riyal. That which is a very robust cash position that we have for the quarter. Our Capex expenditure for the quarter, it was around 57 million. We maintain basically our Capex expenditure for maintaining basically so that we can maintain our production profiles. Our net debt stood at 264 million. The reason for that, because of the current loan facility that we're having as compared to Q1 last year. We recorded a very strong return on capital employed of around 22%, which represent around 6% increase as compared to Q1 last year. Moving on to the next slide. So we're now comparing basically Q1 performance of this year versus Q4 performance of 2024. Just to elaborate more on the financial strength and robustness of our basically financials, our cash positions and revenues. So again, our oil and gas sales, basically the oil and condensate sales increased by 5%. The oil prices stood at the same from last quarter of last year to this quarter of this year. The gas volumes, they were basically lower than last quarter, again for the same reason I mentioned, the turnaround that took place in block 61, and the average realized prices were almost more or less the same. And again, our basically financials as compared to last quarter, they more or less they improved significantly in the higher side, and which demonstrates really our operational efficiency, the robustness of our financial position, and basically delivering high value and high returns to our shareholders. Moving on to the next slide, back to Dr. Anwar, the future guidance.
Yes, indeed. So our guidance have not changed from what we published last year, but in terms of the producing blocks, mixed oil and gas, block 60, block 61, 9, 53, 65, and 10. We have the guidance on gross production block aggregate ranges between 60,000 barrels oil equivalent to 690, of which about half oil, which is around 320, and the gas is about 2 BCF per day in terms of production, with the gas being 55%. Of course, oil crude is sold as at the Oman selling price and for guidance, and the gas aggregates to about $3.2 per million BTU. And as we highlighted previously, there is escalation per year of 1.75 to 2%, depending on which gas sales agreement we are looking at. When it comes to the OPEX, OPEX sits under $10 per barrel oil equivalent, whereas Capex aggregates to a range of $2 to $3 billion per year. When it comes to the cost recovery limit, it's about 65 to 70% in the various petroleum contracts that we have today. And when it comes to the profit share in the oil side, it's around 65 to 75%. And in the gas side, it's ranges between 45 to 50% throughout the life of the IPSA contract. If you flip to the second page, here we show the average, weighted average of the working interest for OQEP, which is about 33%, if you want to note the costs and the expenditures to OQEP level. Of course, there are other small income, which comes from service contracts like Kareem and Rima, KSF and RSF, and from Block 8 as well, and the tariff agreement that we have with MGP, and that amounts to about 100 million per year. I just want to highlight indeed that the maximum leverage that we have today, as Mr. Jaber highlighted, is 1 net debt divided by EBITDA in the current oil price. If we move to the next slide, I give a briefing about our strategy, just to remind you all that OQEP intends to continue growing in the portfolio as we've demonstrated in the past 15 years. We will do that via selective participating interest investments, participating basically and exercising our participating rights. and through selective acquisitions. We will also maintain replacing and replenishing our reserves. We have been achieving the desired target of 100% or close to it, and we will continue to achieve that in the coming years. We will continue to build our robustness when it comes to the financial delivery, so in terms of EBITDA and our cash flow. We will continue to de-risk our portfolio and maintain competitiveness, and that we will do through basically looking at our projects and our agreements and make them as efficient and competitive as possible. We will continue to expand our gas business and maintain the balance of gas to oil, basically with our intention to lower the carbon intensity, and we promote energy transition. And we will continue to maintain Oman as our committed investment landscape, and we will monitor basically regionally on potential growth. Last, as a reminder to OQEP value delivery, we are a crucial player in the Oman upstream landscape. We have operated in attractive portfolio of oil and gas, and we have contributed significantly to the economy of Oman. We have a proven track record of delivering projects and delivering value. We demonstrate ability to be the partner of choice to many IOCs in the country. We have quite a high quality portfolio of assets, mixed and balanced well between gas and oil, and we will continue to maintain that. We will continue to demonstrate our decarbonization intentions, and use that in our oil and gas operations, as we demonstrated with the latest LNG investment. We will continue to be delivering value to our shareholders and maintain the robustness of our financial generation ability, continue to be resilient and maintain a low-cost asset base, and mostly self-funding our investments within our cash. Lastly, we do have a seasoned leadership team, and we will continue developing our staff to basically take over senior placements in the company. And we continue our low emissions of our below the 15 kilogram CO2 per barrel oil equivalent. At the moment, Block 60 is achieving 16. With that, I leave it to Rido to continue the management of the session.
Thank you, Dr. Anwar. Now we will be entering question and answer session until 3 p.m. If you have a question, please use the raise hand option. And as a reminder, please restrict your question to 2 only. Okay, now we already have one raise hand from Ildar. Please unmute yourself.
Yes, hello. Thank you very much for the presentation and very detailed disclosure. I have a couple of questions on production. Can I ask you to share the split between oil and gas in the first quarter and how oil compares year on year? And is it fair to, do I understand correctly that with the expansion at BSAT in 3Q, is it fair to expect that production should increase, but also this will probably come with the higher water cuts, and which is why I think you seem to be guiding for slightly higher OPEX per barrel? Thank you.
Okay, thank you. Ildar from SBC. Now, who will run?
Yeah, sure. Indeed, in terms of oil and gas split, as I mentioned, at the moment we have about 55% gas in the portfolio. But of course, remember that the gas portfolio brings also the valuable condensate. So that is, we shall maintain that split going forward, inshallah. When it comes to Block 60 expansion, we are expanding the facility to allow more oil and more gas be processed from our flagship asset, Block 60. So by the quarter 3, or let's say quarter 4, definitely additional production will be added. It will start slow, but that is all part of the business plan that we have made expectation for. We are aligning and positioning ourselves for increased production, inshallah, the following year with this additional capacity. And we are looking at growth projects that would utilize this expansion and capacity.
Thank you so much. Just to clarify, so you said currently the oil and gas split is 45-50, which means oil output was about 100 kbpd. Is my understanding correct in the first quarter?
Yes, sir, approximately, yes.
Okay, thank you so much.
Thank you, Ilal. So the next question will be from Mr. Vicent. Mr. Vicent, please unmute yourself, please. And please mention your institution. Mr. Vicent?
Hello.
Yes, go ahead.
Hi, good afternoon. This is Bishan Bhala from Salomon Partners. Thank you so much for the presentation and for this session. Couple of queries. We had a call recently, and I just wanted to sort of confirm my understanding with regards to the cash flow model. So our understanding is the way your oil pricing works is you take the last 30 days median price, and that effectively is the price at which you sell the oil for the next 30 days. Is that correct?
Yes, that's correct. So our oil price that we use is basically taken from and published by MEM. So they take basically the average of the AEB price from Dubai Mercantile Exchange, and it is basically 1 month look ahead.
Right, great. So if today, for example, if yesterday was 7th of May, the preceding 30 days median price is what you would sell oil today for the next consignment, correct?
Exactly. So if we take the same example, so today, now we are in May, so now we know what is the oil price for June.
Fantastic, correct. So then the follow-up question was that come May end, we would already know what the oil price is for the whole of June, which effectively means by May end, we'll have a fair idea of what the first half average oil price is. Is that correct?
Yeah.
Correct. Okay, so now I'll just come on to my question directly. Now, during the IPO, you had very clearly laid out your dividend policy, which is a fixed dividend paid over 4 quarters, as well as a performance dividend, which will be applicable from the first half of 2025 onwards. Now, I completely understand that a performance dividend is board and shareholder discretion, but given what you understand of average oil price for, let's say now almost 5.5 months, and soon we'll have the 6-month average oil price, what are your thoughts on the performance dividend with regards to the average oil price? And let's assume if the average oil price for the first 5.5 months was $65 a barrel, what are your sort of cash flow model? What is the cash flow model indicating on the indicative performance dividend? If you could just give us, even without zooming into a number in terms of there's a performance dividend or just some sort of guidance on that.
Yeah, so now we're doing our own analysis when it comes to assessing our cash position. So as you might have seen, we have very strong cash position as of end of March. Now we're doing the forecasts using the currently published June price. But we are doing now the assessment or the analysis of scenarios on the production numbers. we're not yet basically having an indicative basically amount on the June end cash position.
Okay, even if you don't look at the June end cash position, even if you were to sort of look at, the past 5.5 months, what does that indicate? Because those are already locked in, published, public figures.
Yeah, so the last 5 months, the average realized price was around 75 until May. June price that was published by MEM, it was around $67, 67.7. And as I said, now we're doing the estimates of production for the rest of this month and then the month of June, running different scenarios, and hopefully that will be able to at least to come up with a rough number, would say 50-50 maybe by the end of this month.
Okay, understood. And okay, so the follow up to that is, you would obviously have the best idea. Our sort of analysis as the investor community is to look at what the break-even oil price would be to maintain the sort of fixed dividend per quarter, which of course you have enough, you're in a very strong cash position, but also from a performance angle, performance dividend perspective, would that break-even oil price be $60 a barrel, $55 a barrel, $65 a barrel? Could you give us some insights to that?
So we run our sensitivities when it comes to oil prices. Of course, our first objective is to maintain the base dividends as we committed in our dividends policy. But then we run different scenarios at different oil prices to stress test basically our ability to pay the performance-linked dividends.
And if I may then further ask, what's the break-even oil price to maintain your base dividend? If the $600 million base dividend per annum, what's the average oil price for that? Let's not talk about the performance dividend. Is it $60? Is it $65? Is it $70? Because that is pretty much your base dividend from operating cash flows minus Capex, so your free cash flows. If you could give us some insights into that, please.
So we're doing now currently our analysis and our scenarios, and we'll be in a position basically to come up with that maybe in the next few weeks.
Okay, and then the build up to that is once you do those analysis and declare those numbers in due course of time, would that give us then a fair idea of what that performance dividend, if it were to be paid, back calculated, lead to a break-even oil price? Would that be the correct way to look at it?
Yeah, exactly. But as I said, I mean, these are all estimates, and I mean, when it comes to price, yeah, it is known. But however, the other variable is the production, which we are basically our aiming the goal is to maintain that, along with the cost resilience that we're having and the optimization that we're having within our portfolio, which we're aiming to basically to conclude, inshallah, by the next few weeks. But just bear in mind that our financials we always be subject to audit, and that's where our aim is. So we're going, inshallah, to have H1 audit. So that the results will be once we close June, so we'll be audited around July. So that to have those all basically audited numbers.
Understood.
Thank you,
Understood. And you mentioned, sorry, sir,
Mr.
just give me another 30 seconds, please. Yeah, just last 30 seconds. Thank you. You did mention production. Now there are three scenarios with regards to production. Either it goes down because you do a divestment like you did previously. One is it remains where it is and you do optimization and incrementally goes up. And third is you do a Capex, which in due course would lead to a higher production. These are the three scenarios for production number, right? Because oil number is known. And the other factor will be production. And these are the three scenarios that would govern production primarily, correct?
I would say production will either stay as per plan, يعني balanced, or يعني we could see improvements from what we are basically conducting in terms of optimization. So it's not the third scenario is I don't think it's on here.
Okay, fine. I'll wait back in queue for further questions. Thank you so much for now.
Thank you, Mr. Bisan. So for the next question will be from Mr. Abbas Ali Ahmed. Please unmute yourself and please mention your institution name.
Thank you. Thank you very much. This is Abbas Muslimi from U Capital. Thank you for the call. Just a couple of questions. One is on the OPEX side. What sort of cost optimization are you looking at and the scale of it, given that if oil prices were to stay lower for longer in the $60 range, could you speak about, the cost optimization opportunities on the OPEX side, and also any sort of rationalization of Capex going forward, and if there's a Capex guidance if oil prices were to remain at the $60 mark? That's my question.
Okay. On the OPEX side, it's, to be honest with you, a continuous initiative with and without low, let's say, and challenge oil prices. We continuously improve on our operating expenditure. We have demonstrated quite a number of, let's say, drilling duration, savings. So duration got optimized, and hence drilling costs got optimized. We also always improve and have a look at our activities in the field, optimize them, shorting them, leading to cost reductions. We have also our D-boom concept for the facilities, where we have the facility provider take the risk of providing that facility on budget and on time. So these are typical OPEX reduction initiatives, and these are industry standard, to be honest with you, and continuously we achieve savings. When it comes to Capex rationalization, there is no intention whatsoever by OQEP or the JV partners who are basically operating our JV assets to reduce Capex at this moment in time. Capex is ongoing. Of course, optimization we could do. If oil price gets lower and lower, then we could always rationalize Capex if required. But we see no reason to do any of this today with Capex. I hope this answers your query.
Okay, thank you. Now I will read the next question from chat box from Mr. Anwar Al-Galani. I think this is a similar question like Mr. Bisan. With the current oil price, can OQEP distribute the linked performance dividends? I think we already explained it in during Mr. Bisan question. So next question will be from Sandes. Yes, Mr. Sandes, please unmute yourself.
Yeah, hi. Am I audible?
Yes. Please mention your institution name.
Yeah, hi. I'm Sandesh Shetty from Uber Capital. I wanted to ask a question on the gross capex. Like, could you please specify, provide a breakdown on the gross capex, like how much is allocated for recurring and how much is for allocated to the acquisition part? So, can you provide a breakdown on that?
At the moment, to be honest with you, our capex is all either drilling well or facility expansion related capex. And remember that this addresses the assets that we operate ourselves and the assets that are operated by our partners, Shell, Total, BP, ENI, and so on, Occidental. So the capex is not for acquisition at the as per sort of guidance. It's for drilling wells and increasing capacity in the facility.
Okay. Okay, thank you. Now I will read again from chat box from the name is not clear, AWS. The question is, will there be a repurchase of shares through market stabilizer and liquidity provider?
We can come back on that question at a later stage. We can comment on it.
Okay. Thank you, Mr. Jaber. Now, for Mr. Abderrahim Ahmad, please unmute yourself. Mr. Abderrahim? Okay. If now, if from Ildar. Oh, already. Okay. Go ahead, Abderrahim. Please unmute yourself. Hear you. Okay. Okay. So for the next question from Ildar, please unmute yourself.
Yes. Hi again. This is Ildar from HSBC. Just to come back to this topic of production, in your outlook for the full year 2025, I think you gave a range of between 220 to 230,000 kbpd. Where is the delta coming from? Is it from oil or from gas? And maybe if you could actually give us a split again for oil and gas for the full year in your guidance, that'd be very helpful. Thank you so much.
Okay, the production for 2025 is indeed in the range you mentioned, and the delta could be slightly gas, but it's mainly oil. It depends on the optimization activities in the ongoing oil, basically related, blocks, block 53, block 9. And also block 65 are all undergoing, drilling. Of course, as you know, we plan on certain well delivery, let's say from drilling, and we put our, range basically to cater for, improvements in production. We always carry out optimization activities also in existing wells, things like stimulations, acidizations, and so on. And that's an ongoing, practice in oil and gas wells. So mostly oil, but it could be some gas as well, from the likes of Abu Tubul gas, from the likes of Block 65 gas. As well. So block 65, we have also gas which is produced as associated.
Thank you so much.
Addresses your query.
Yes, thank you so much. And basically, it's the same ratio, 55% for gas, 45% for oil. We should apply this range for 2025.
I would keep it as that, indeed, yes.
Okay, thank you.
Thank you, Dr. Anwar. The next question will be from Mr. Colin Smith. Please unmute yourself.
Yes, thank you for taking my question. Two, please. About what you think the work program is going to look like and what you're hoping to find when you get to drilling on the block.
We missed the first half of the question.
Sorry,
Can you repeat again?
Sure, let me repeat it. Can I start with a question on exploration and specifically on Block 54? Just what do you expect the work program to look like and what are you hoping to achieve with the block?
Okay, so Block 54 is a promising oil block. And that's why OQEP was interested, highly interested in taking that block. It has an existing well And the first program that we will do in the block is to attempt to access the existing well and immediately test it. And if the test is viable, immediately produce it. So this is, part of what we could achieve in terms of small oil, additions. But the rest of the program on the block will contain, the acquisition of seismic, the studies, geological studies in the block, and potentially drilling 1 or 2 new oil exploration wells. So this is in a nutshell the program.
And are those wells commitment wells?
We do have commitment wells at the moment. Indeed, basically seismic and one well is commitment. But usually we do more than the commitment, depending on what program we follow, and depending on how much appraisal we would like to achieve before we basically develop the acreage.
Okay, that's helpful. And then my second question is on Block 61. Could you just comment about whether you think the negotiations to develop the additional resource will be completed this year, and also confirm that your share of that gross resource is not in your current P+P reserves?
Okay, I can confirm that the study which led to an FDP update would lead to reserves higher than the 2P. It's accessing more than indeed the 2P. And the government has to approve that FDP, and it's going really nicely. The FDP most likely will be approved by the end of 2025 or early 2026. Although all the technical work has been done for the FDP, but it is waiting for an FID on the monetization scheme. And the monetization scheme, as you may have seen publicly, it's going to a new LNG train investment. That basically FID will take place for the train in 2026. And this additional gas from Block 61 is feeding into that. It's a very good lucrative project for OQEP. OQEP, as you know, has 30% in that block. And we look forward to basically take the additional gas, monetize it, and through the LNG investment that OQEP, along with the operator BP and the other parties in the block, are very willing to FID, inshallah, in 2026.
Okay, thank you, Dr. Anwar. For the next question, to Mr. Joyce from United Securities, please unmute yourself. Joyce?
Hello. Hi. Am I audible?
Yes, go ahead.
Thank you. Thank you, Rita, and thank you, gentlemen, for the presentation. Congratulations on the good set of numbers. See, my first question is on your guidance. You have reduced your gas price outlook for 2025 from $3.5 earlier to $3.2. So could you please explain what are the reasons for this? And also, in addition to that, you have also increased your OPEX and CAPEX guidance for 2025. Earlier, it was the OPEX was between $7 to $9 per barrel, and now you're talking about less than 10. And your CAPEX guidance was $2 billion earlier, and now you're talking about $2 to $3 billion. So could you please explain why are you looking at higher OPEX and CAPEX in a declining oil price scenario?
Okay, very good question. Let me take the first one. So the first one on the gas, it's mainly a volume equation. We had basically turnaround in Block 61. So the amount of gas is slightly reduced compared to last year because of the turnaround that took place in Q1 in Block 61. And 61 is a significant basically gas volume, and the price of that gas volume basically impacts the aggregate weighted average. So that's the reason for your first question. The second question about OPEX and CAPEX, our OPEX, we say below 10. It is below 10, so it's really around the $9 per barrel oil equivalent. And I could say that this could be from some of the expensive production that we have, perhaps related to the steam flood of Block 53. But soon we will have a revision on that number because of the new fiscals that we have negotiated with the government, which reduces, in fact, the operating expenditure in that block. So the guidance of last year, 7 to 9, we are around 9, and it is gonna be lowered, inshallah, once we finalize the negotiation of Block 53 fiscals. Same with the CAPEX. I guess the increase in CAPEX is related to the ongoing growth projects of Marsa Train 1. So that is an expansion. We have expansion also in Block 53 itself with wells being drilled. We have wells, more wells in Block 65. So I presume part of the CAPEX goes to these ongoing blocks.
Thank you for that. The next one is related to the dividends. I understand during the presentations you have said that the 600 million base dividend will be maintained for the next 2 years. But in this quarter, what I'm seeing is your receivables has increased by almost 60 million riyals. And I assume these are primarily amounts due from other operators. I just wanted to check if this is a normal scenario, operating scenario that we are looking at. Will there be ups and downs in receivable changes? And when do you expect this amount to be received? And added to that, I have a hypothetical question where if you don't receive this amount by end of June, will it impact your performance dividend decisions? I understand you have a strong cash balance, but I'm just looking at the free cash flow aspect of this.
Yeah, thank you for the question and the analysis. So in fact, basically we had the high receivables indeed in Q1, and subsequent to that, we basically made a collection. And the amount that was collected is around 196 or 197 million. So that already received. And as we speak, now basically the balance that is still basically to be collected is around 70 or 80 million. So it's not going to be the situation going forward. There were certain receivables from our JV partners and also from the IGC, which is the company that we sell the gas to, as well as the government for the service contracts. But as I mentioned, the collection were made around the 15th of April. So now we have that cash in.
So this is $196 million, right?
Sorry?
This is dollars. 196 is dollars, not Omani riyals, right?
No, Omani riyal. Because if you see the receivables in the financials that we disclose, as of end of March, we had 279 million Omani riyals.
Yeah.
Yeah.
Okay. Fine. Got it. Thank you.
Thank you, Joyce. Now I will take a question from chat box. The question is, can you explain more the nature of relation between OQEP and average? Because it was mentioned in the financial statement that the difference between first quarter 2025 and first quarter 2024 is the disposal of average operation. I think this.
Yeah. So until basically the first half of last year, OQEP used to own around 51% of Abraj, because Abraj is a publicly listed entity. So 49% is basically owned by public, and 51% it was owned by OQEP. And it was end of June last year, we made a decision basically of transferring that ownership to our main shareholder, OQSOC. And since then, from the second half of last year, Abraj is not anymore within the OQEP basically entities.
Thank you, Mr. Jaber. So for the sake of time now, I think this is the last question from Abdurrahim. Can you unmute yourself?
السلام عليكم. من فضلك أنا كنت بس بسأل عن التوزيعات خلال العامين القادمين. هل هيكون فيهم أي تغيرات ولا هيكون ده متوقف على سعر النفط؟ والسؤال الثاني من فضلك.
أدرم بس السؤال صوتك يقطع، فهل ممكن تعيد السؤال مرة ثانية؟
طيب أنا كنت بسأل حضرتك عن الأداء التوزيعات خلال العامين القادمين. هل هيكونوا كما تموا في نشرة الإصدار ولا هيكون في تغييرات على التوزيعات؟
لا طبعا على حسب نشرة الإصدار. تفضل.
إن شاء الله. السؤال الثاني، توزيعات الأداء اللي هي المفترضة إن شاء الله هتكون في الربع القادم واللي بعد القادم، دي هتكون كام تقريبا؟
شكرا على سؤالك. بس أجاوبك على سؤالك الأول. بالنسبة للتوزيعات النقدية اللي حسب ما أدرجت في نشرة الإصدار، الشركة ملتزمة فيها لهذا العام اللي هو عام 25 وعام 26. فولله الحمد الشركة يعني أدائها المالي والنقدي قوي، ويؤهلها إلى التزامها بالتوزيعات النقدية كما تم الإفصاح عنها في نشرة الإصدار. بالنسبة لسؤالك الثاني ما يختص بالتوزيعات النقدية المرتبطة بالأداء التشغيلي، مثل ما ذكرت يمكن في بداية اللقاء إنه إحنا حاليا في قيد دراسة يعني هذا الشيء، لأنه في تقديرات نعملها على حسب أسعار النفط اللي محققة إلى شهر 6، بالإضافة إلى تقديرات الإنتاج نفس الشيء إلى شهر 6 إن شاء الله، شهر يونيو. وعلى ضوء إن شاء الله راح نحدد يعني خلينا نقول يعني حجم التوزيعات إن شاء الله اللي راح تكون بالنسبة للتوزيعات المرتبطة بالأداء
إن شاء الله. طب ده حضرتك شهر 6 المقصود به 6/25؟
6/25 نعم، شهر يونيو 6/25. طيب
إن شاء الله نكون من أهل الدنيا إذا ربنا أراد. والتوزيعات ما بعد 26 هيكون نظامها إزاي؟
طبعا بالنسبة للتوزيعات النقدية وسياسة التوزيعات النقدية للشركة ما بعد عام 2026 هي نقطة نقاش إن شاء الله راح تم مناقشتها من قبل الإدارة ومع مجلس الإدارة، وأخذوا نفس الشيء فيها رأي الجهات الرقابية، هيئة الخدمات المالية، وإن شاء الله راح يتم يعني الإفصاح عنها بإذن الله في بداية العام القادم بإذن الله يمكن في الجمعية العمومية
إن شاء الله. ربنا يبارك فيكم. طبعا الحمد لله الشركة قوية، لكن اللي احنا مستغربينه ليه السهم اداؤه عامل كده
أيوه.
ومحدش قادر يجاوبنا الصراحه.
هو اداء السهم طبعا يعني يتاثر يعني باداء السوق بشكل عام، طبعا بالعوامل الجيوسياسيه اللي حاصله خلينا نقول في العالم، واحنا طبعا جزء من هذا العالم، واحنا مش في معزل من التاثيرات هذه. ولكن مثل ما يعني طلعتوا على القوائم الماليه في الافصاح وفي موقع الشركه، يعني اداء الشركه ولله الحمد يعني اداء قوي، ومستمرين الحمد لله في عملياتنا بشكل يعني ثابت، وما ياثر ابدا ان شاء الله على التوزيعات النقديه المزايمه.
ان شاء الله ان شاء الله. ربنا يبارك فيك. شكرا.
شكرا.
Thank you, Mr. Abdurrahim. That concludes our call for today. Thanks again for your participation. If you have any follow-up question, please contact the IR team. You can find out contact details on the OKEP website. A transcript and replay of the call will also be available on our website next week. Thanks again and have a good weekend ahead. Thank you.